So the Midwest is really durable, robust, and really set up to be that way for the long run. This part of the country is now seeing a lot of tailwinds that might not be recognized yet by a lot of folks. People still call it the Rust Belt. Definitely a fair assessment decades ago as the industrial base got worn out. But what you've been seeing now for decades is a resurgence of these cities successfully decoupling from that Rust Belt moniker of especially the 80s, the 90s, the early 2000s. And so what you're seeing now in the Midwest is these world-class suburbs, diversified employment. There are no longer these one-factory towns. All kinds of technology, services, manufacturing, finance, pharmaceuticals, a big one. So lots of different types of jobs. And these suburbs are safe, they're clean, they've got great schools, they're affordable. So the quality of life factor for the Midwest is really starting to become well known. And other things like rent growth. So in Indianapolis, for example, you've had 40 years of, on average, about 3% rent growth. And that might not seem as sexy as a Phoenix or a Vegas that tends to boom, but it doesn't bust here either. It's been sort of this steady eddy climb, Tortoise versus the Hare. And so in these other markets where they boom, they also bust. And so there's a lot more up and down in the real estate cycle, whereas in the Midwest here, it's a lot less volatile. So for example, in 2008 and 9, when places like Vegas lost 50% value of the real estate, Indianapolis was down 9%. A lot less volatility. She doesn't boom, but she doesn't bust either.